afternoon to all the attendees and all the distinguished panelists. For the GST, we just cut its cake on the occasion of 4th anniversary. It has been a very exciting, perhaps bittersweet journey, of course, full of details. So perhaps biting journey, for a part of the industry, a bit enchanting journey for a large number of GST policymakers, and truly enlightening and enchanting for fiscal experts and the academy. So the theme for today's discussion is GST enabling digital economy. So before we come to GST, let me provide you a glimpse of the size of India's digital economy and sumptuous prospects of mega growth prospects in the coming years. So what appears to have actually buttressed the digitalization or digital growth prospects is perhaps the much hated, the COVID-19, which carries the dubious reputation of giving, shocking setback to the economy, at the same time, incentivizing the process of digitalization. So anyway, let us take a look at the size of the digital economy patterns. I will say we have roughly about 78 crore internet users now in India, which is, of course, this number is aiding, or rather, quickening the process of digitalization in a big way. We have about 120 crore mobile users. And in fact, in the month of January 2021, we had UPI payments to the extent unbelievable. It's about 4.3 trillion US dollar. So that was the value of the transactions through the UPI. That shows the speed of digitalization in the Indian economy. And like most of the developed economies, of course, India's tryst with digitalization is also sort of unstoppable now. So let us take a look at the consumer digital economy. Because we have B2C and we have B2B, and that is how the good number of provisions in GST, like e-invoicing, etc., that has been designed, from that perspective only. So, if you look at the consumer digital side, in the pandemic rate 2020 itself, it clocked around $90 billion. That was the size of this retail economy, the consumer digital economy. By 2030, most of the studies have indicated that this number will be perhaps, falling between 800 billion to $1 trillion. So that is going to be the size about almost 22 to 24% of India's GDP. And mind it is a conservative estimate because, subject to various other catalysts which are available, for digitalization process. And about 88% of online shoppers, they will be largely from tier 2, tier 3, tier 4 cities by 2030. So they are actually going to be the actual propellers of growth in coming years and in helping the process of digitalization. In fact, this digitalization process of the economy will also give some idea to GST policymakers how they should be designing most of the IT tools and maybe even the provisions, in a big way, IT-enabled provisions. So looking at that, if we look at almost 90% of the informal market, which we have today in India, which is one of the largest, the job creators, it's likely to be integrated with the organized sector. So that's going to be a major benefit, for the Indian economy, which will start adding straight away to the size of the GDP, because major part of informal economy, it gets excluded automatically. So that will give a major boost to the size of the economy. And if we normally, for any economy, the B2C and B2B, if you look at B2B, generally its size is much bigger than the B2C. So as for one study, by 2030, the B2B size for India, the Indian digital economy, is likely to be roughly around $6 trillion by 2030. So that itself, gives us an idea that where exactly we are heading, which direction we are heading, and how our fiscal experts and policymakers, they also need to fine-tune their own, the method of working and thinking in terms of making the provisions a little more IT-enabled. So let me now change the playground from digital side to GST side. So before I go to the panel for panel discussion, I would rather formally welcome and greet Mr. S.K. Rahman, Joint Secretary, GST Council Secretariat, and request him to give us a brief presentation and the issues which you would like to highlight today. So over to Mr. Rahman.
Thank you, Mr. Shailendra ji. Formerly, Sri Dilip Chinoy, Secretary General FICCI, Sri Badri Narayanan, Sri Pratik Jain, Sri Sridhar, and all the distinguished persons who are attending this webinar. It is indeed pleasure to be associated with Tax India Online for the GST Council Secretariat for the government as a whole. Almost for 1.5 years, I was not able to come for this kind of webinars because we are here in the GST Council. Some people start taking a view that if any statement is made or any discussion is made or any clarification is done, so it was being interpreted as that is the official version of Government of India or that is the version of GST Council. That was the reason we were avoiding kind of webinars or kind of question answers. But I would like to say in the starting that whatever the opportunity that is given to the government, particularly to GST Council, I will be presenting the government perspective of what all has been done in the last 4 years on the topic of this digital economy, or what is the GST role in enabling India's digital economy. Please understand that I'm trying to tell you what government has done, and I'm not making any statement. Tomorrow you cannot say that so-and-so Joint Secretary has said this is what we are going to do. So please understand with that, with a small rider on that aspect. To make it job quickly, I will go through a presentation. I would like to quickly run through a presentation, show a few slides. Is the slide full, Mr. Sridhar? Is it coming? It as full?
Yeah. It's coming.
Yeah. Basically, what we are trying to say is, I am presenting it in 4 or 5 subheadings. One is right from the evolution of GST. I mean, how exactly we are going. What was the digital concept? How the digital concept has been kept in future? What were the salient features at the time of launching? How far are we trying to contribute for ease of doing business? What are the new initiatives that the government is doing? And what are the steps we have done and we are proposing to do and we have been doing for the trade facilitation? Maybe a word on the way forward. I thought I'll present to that. If you see historically, even from the evolution of GST, one of the objectives was to establish a common national market. As you are aware, GST reform in indirect taxation is the biggest reform that has happened after independence. So in trying to establish one nation, one tax, one market, obviously it was not possible without having one common portal. For any taxpayer in the country, with respect to the indirect taxation, with respect to GST, he has to do all the transactions front end one portal, that is GSTN. As you've seen in the last 4 years, we have grown into 1.29 crore taxpayers. I mean, the number of returns that have been filed, at least till 11th July 2021, almost 70 crore returns have been filed on GSTN portal. Like the figures are here, you can read it for yourself. So almost, if you talk of revenue also, approximately around 35 lakh crores of revenue has been paid through the portal, excluding IGST and import. Even include that, is approximately around 11 lakh crore, 11 lakh crore revenue per annum is being handled on these electronic portals. And if we talk number of transactions, limitless 19 crores. And if we talk of number of e-way bills, approximately 198 crore e-way bills have been issued through the electronic portal. I mean, that itself shows the very concept, the design of GST right from the starting was to keep in track of the digital economy. If we talk of salient features of economy also, this is just now you have been mentioning that, bringing informal sector into formal sector. Exactly, this is the point. If you see prior to the GST, the number of taxpayers who are on the unorganized sector, and today if you see the number of taxpayers who are into an organized sector, this is something called formalization of economy that has happened. In the initial, people were not understanding the importance of, after 3-4 months, once they realize what are the benefits that are available, and obviously people started enjoying the ITC credit that is easily available to them. The major change, if you see salient feature, is that there is no physical copy submission. No taxpayer ever in India, 1.29 crore taxpayers, can never go to any GST office and say that this is my application. Everything is the digital summation. If you want to summarize, if you want to put it into a fast, 10 bullet points, I'll put it. Registered taxpayer pre-GST, approximately around 60 lakh people were there. Today it is 1.29 crore taxpayers. If you talk about compliance, everything was almost manual prior to that. Now everything is online digital. You are able to see that, and everybody knows this also. I did not say, but at the same time, just mentioning to you. Now, if you talk of returns, if you say pre-GST, there were different returns with state governments, VAT returns, service tax returns separate, and excise returns separate. Now, the post-GST, you are only having two returns. I mean, GSTR 1 and 3, major I'm talking. GSTR 1 is outward statement, GSTR 3 is a return. Authorities you are trying to deal with, pre-GST, multiple authorities were there. Post-GST, there is only single authority called GST. Of course, there is a SGST content, there is a CGST content. If you talk of e-way bill, you might have seen the biggest change that the check posts have vanished. There is no check post at all. The e-way bill has come, electronic way bill has come, and e-way bills have been generated from one single common portal. If we talk in terms of the processes, let's say ease of doing business, as you can see, this itself is a proof. 142 was somewhere around 214. Now we are 62, 63. So this shows that probably, some or other way, the ease of doing business has increased, and probably GST has played some role into that. If we talk of registration or amendment of registration or cancellation of registration, pre-GST was manual, post-GST everything is online. I myself, I started almost 28 years of service. I have seen from the time of 94 when people used to come for registration, excise registration, the kind of documentation, the kind of verification that is to go. And today you see, just go online, you register and get your GST registration. Refund, you just apply, do the export, then you wait for a refund to come, it gets credited to your account. Previously, it was manual refund, you all of us are aware. ITC credit, earlier it was SENVAT credit. Now, if you see, it is direct credit that comes to your account. The moment you try to file GST or 3B, entire input credit is flowing into automatically. And tax rates, I need not say, as a result of that, what has happened is obviously on the tax rates. Just to slightly focus on the ease of doing business with respect to GST and digitalization, if you just can compare multiple returns to single return, multiple payment dates to single payment date, high cost of compliance to low cost of compliance. As I mentioned it to you, I can just tabulated you from 142 to 63, and particularly here paying of taxes. If you see, there's a component of paying of taxes here that has improved from 172 in 2017 to 115 in 2019. With the limited data I could access, I could present only this. Maybe some of you may be having much more improved data. 115 is not bad when compared to 172 in 2017. That was the time GST was being launched. Now, if you talk in terms of new initiatives like government, what new initiatives we have done and we have been doing, a quick look. I'm trying to say, just to set the tone for your panel, is the discussion that government perspective should not be forgotten. As you have seen of late, recently also, what we have done is that we have introduced for the nil return to file, you just have to send an SMS. SMS facilities is available for filing a nil return. It obviously, I think it is a great facility. QRMP scheme is also introduced, that is called quarterly return monthly payment system with invoice funding facility. If you are filing your returns quarterly basis, so that your recipient would be able to take the credit and enjoy the benefit, you can file your invoice, just the invoice on IFF, that is invoice funding facility. And we have kept for to avoid all these difficulty, composition scheme, which is also online, makes you life very simpler and easier. And for the annual returns, GSTR 9, we said less than 5 crores, it is optional. You want to file. If a GSTR 9C, we said less than 2 crores. GSTR 9C less than 5 crores is not required. And for GSTR 9, less than 2 crores, it is optional. So by making that, we didn't want to clog the portal. At the same time, give little bit of benefit to MSME taxpayers. And QRMP scheme, you are well aware, more and more people are using this. There could be further improvements into QRMP scheme. Now, if you see right from 17 to 20, when you compare, please do not compare 2021 with 2020. Try to compare from 17. In 17, when we started with invoice matching. If you remember GSTR 1, 2, and 3, then we thought we'll do. Then we introduced slowly e-way bill. Then we came to the rule 36.4 in 2019, started with 20% difference, meaning If your supplier has not even filed his GSTR1, still as a recipient, you can go ahead taking credit of that. We started with 20, 10, 5%. Now e-invoice has been introduced, which you are well aware, started with 500 crores. Today we are around above 25 crores. Now, if you say e-invoicing system, I need not elaborate. I am not getting into facts, and I'm not getting into details which you are already aware. The invoice schema itself that has been devised has been done such a manner to capture as much data as possible before you approach the invoice registration portal for IRN. The IRN that is being given, it is being given as a package. What is being given is actually QR code in which there is an IRN is embedded. What you are expected to do is that you will print or you will digitize, you will show this QR code onto your e-invoice in which the IRN is built in. It comes along with digital signature, which gives you quite a lot of authenticity. At least from my personal experience, I can say in the last 4 years, e-invoice is one scheme I think that probably has succeeded well. It has got good acceptance from the trade also. And I think this further to go, we can improve upon this and we can take some sessions from the trade on that. Coming to B2C, B2C QR code has been proposed, but because of certain difficulties, it has been postponed. Right now, it has been postponed up to 30th September, even though it is supposed to start from 1st December 2020. Now, B2C QR code, we are telling few components to be added. The components I have mentioned it here. It basically has 5 components: supplier GST number, supplier's UPI ID, the invoice number, invoice date, total invoice value, and the breakup. In certain situations, if you are not having supplier UPI code, then you can have authorized person. If you are not having invoice number at that time, then you can go for your whatever is the your code number that you will be having. After which only after payment only will generate invoice. If you are only paying part of the invoice, certain amount has already been paid, you can mention about remaining amount. So that kind of flexibilities have been given. I mean, many taxpayers who are above 500 crores are preparing themselves for having the B2C QR code, which will actually benefit digital payment, as well as it may arrest to a certain extent what could be leakage of revenue on B2C transactions. Coming to GSTN, I mean, even though we are from GST Council, I can need not tell about the services that are being offered about GSTN. GSTN itself has become a novotion. It is the biggest portal. I mean, it has become a role model portal for many of the other ministries also now. They're coming and saying that the kind of services that they are giving, the kind of, load that are able to take. I mean, everything is self-explanatory. All of us have gone through this process. Just to make a mention, I mean, to few things. Apart from taking care of the various compliance measures such as return filing, tax payment, filing, etc., some services are also being given, such as registration, refund, appeal, etc. And taxpayers' needs are being slightly being understood and trying to engage GSTPs further. Grievance redressal is happening. Then many of the facilities have been given for the taxpayer for the view and download facility for GSTR 2A, 2B, 3B, and import bill of entry details also. And there is also tracking status that has been given for the taxpayer to track their refunds, LUT, return, registration, etc. And continuously, taxpayer education is going on. The entire thing is to give empowerment to the officers as well as the users, that they get all the ledgers, all the returns, all the comparison report, risk rating, matching tools, everything into one portal, and that portal is trying to give the best of its services. Of course, all of you people are leaders in industry. You might have faced some difficulties here and there. I do acknowledge, but whatever the suggestions can be always given. And please remember that government is trying to improve, and every suggestion that you are giving is being taken care of. The government is listening. Government is trying to accommodate to the extent possible what are the suggestions which are required to be implemented. Just to take one auto process. Now today you generate one e-invoice, your e-way bill becomes automatic generation. You can generate along with it, or you can have standby. The data of e-invoice we are auto populating into GSTR1, where your GSTR1 outward statement is more or less ready. Now with GSTR1 data of the supplier for the recipient, it is getting populated into GSTR2A and 2B. With the help of 2B, 2B data again gets populated into a GSTR3B. With single e-invoice, we are almost more or less able to have some information auto-populate into GSTR3B. I think this is could be possible only because of the taxpayers' maturity, because most of the taxpayers are already into higher levels of IT platforms. Of course, some negative aspect has also happened during this period. If you see in GST for last 4 years, there are a lot of things that have happened. Out of that, what we can talk of is about fake invoicing and ITC frauds. We had to take certain measures to curtail that. For example, Rule 36(4), where we said that even if supplier does not upload recipient take, we have no restricted not more than 5%. We have gone ahead using Rule 86A in case of suspected, misutilizers of ITC for blocking of the credit. During this process, you might have noticed that yes, there is some amount of discomfort, but this had to be done keeping in view the fake invoicing and ITC frauds that were going on. E-way bills also, no e-way bill can be generated if you do not file GST or 3B. These kind of rules had to be implemented. For example, we have also set the minimum amount to be paid through through cash ledger should be minimum 1%. And for people where registration was suspected, we had to go ahead with suspension of the registration. These are the few enforcement measures. Please understand that government balances trade facilitation and enforcement. If you talk of trade facilitation, you can see, if you recollect the trade facilitation that was done during COVID of 2020, we started with saying that work from home to the officers. For the taxpayers, we said saying that even if you don't have digital signature certificate, from your home or wherever which is other than your workplace, you can file your returns using EVC, electronic verification code. PH, personal hearings have started on BC. Then remote access was also given, and a lot of work was done to expedite, refunds. And during COVID of 2020, if you remember, we have extended the due date of GSTR1. We have waived the late fee. We have reduced or also waived late fee in certain cases. E-way bills that have got expired during this process of lockdown period, national lockdown period, we have got them revalidated, and we have made a lot of provisions which are electronically with respect to TCS and TDS. Not to forget about the latest COVID of 2021. In 2021, also similar facilities have been taken with respect to waiver of interest, reduced penalty, waiver of late fee. Then we said saying that GSTR1 due dates to be postponed. Then for Rule 36(4), we have given cumulative accountant, wherein you don't have to have monthly one basis. Then we have also said that with respect to TCS, TDS, and ISD, lot of relaxations have been given when they do the business processes on the portal. Apart from that, amnesty scheme has also been launched for the period starting from July 2017 to April 2021. Those taxpayers who have not filed their return, they can file so till 31st August with reduced penalty and late fee. Now the way forward, what we are looking. Way forward means, again, I'm not making any statement on behalf of neither Secretariat, not from the government. I'm only seeing what could be possible works that are still pending that are being talked up. One is obviously about pre-populated refund application. When you are filing GST at 3B, to some extent we are trying to pre-populate. I'm very sure we will be taking certain steps for pre-populating your refund claim also. And more stress for business processes also is on seamless flow of ITC to the extent possible with minimal blockages. As I have already mentioned it to you, B2C transactions are ones where the customer is tempted to go to ask without invoice or without GST. Like an individual buyer, if I go to the shop, if the shopper says saying that with GST it is 112 rupees and without GST is 100, there's always tendency for the consumer to go for without GST. So we wanted to involve consumers to it. So we were thinking of starting initially an incentive scheme, a kind of lottery kind of thing. And somehow it could not take off because of COVID situation. Probably that is one work that is left over. Probably we can consider. I'm not saying that we are going to do it, but at least we can think of it. And we also want to push, facilitation centers all India, where the taxpayers from their office from their own premises can do, or they could be facilitation centers established all over India where people can go there, file their returns or inquire about the refund claims and do whatever the digital process that are required to be done. And for this, we also wanted to have maximum number of GST practitioners. Provision has been made. Till now, a lot of people have been identified as GST practitioners. And in fact, from our side also, there are 28 states, 3 UTs with legislature and central government. The way we are operating is that for you, we are giving one front end called GST portal, whereas back end, there are certain states which are still having, their own software. So there is a time that is going to come. Very less number of people are having their own backend software. Large number of tax administrators are having a single uniform software with GST and at the backend also. A time will come when probably the government also will come forward with lot of steps. The purpose of me coming here, and thanks to TIOL for giving this opportunity, is to request the trade through this platform of TIOL that government is taking maybe 2-3 steps forward, and you can take another 2-3 steps. It is a trading partnership between the government and the taxpayer. And you know very well the entire world economy is down because of COVID, and India being one of the leaders, economic leaders, which have stood up very fast from the effect. And I will not say completely stood up. We are in the process of recovering our economy, and whoever gets up fast and runs fast obviously is the winner. The entire world economic order is can be reset. So taking that cue through TIOL and taking this opportunity, I will request to all taxpayers that please do not worry about small things that I am not getting this, I am not losing on those, and have a slightly broader picture, because India has to become in the world, maybe in the first 2-3 places we'll have to go. We have to go for 5 trillion economy. I mean, if you want to realize that dream, this is the time. The current year of 21-22, 22-23 is going to be very, very critical. In this year, the government will try to do to the maximum extent. At the same time, I will request the trade also to come forward, so that either we make it or we may not be making it at all. So this is the next 2 years is the very, very crucial period where government will work hard. At the same time, we'll appeal to all of you also to join hands to make India one of the economic superpowers, because the entire world field is open for India now. Thank you once again. Thank you for your patient hearing. Thank you to TIOL for giving this opportunity. If the panelists have 1 or 2 small questions, I can attend. Otherwise, as per your program, you can go ahead. Thank you.
Okay. So, okay, wonderful. So, I mean, maybe if Pratik has any question, or Mr. Badri has any question, or Mr. Chinoy would like to any question, then Mr. Rahman would like to, answer those questions. Otherwise, I would like to thank him for this wonderful presentation. A lot of steps being taken, and he is being quite honest that a little bit of discomfort could be there. In any fiscal legislation, it's not really fiscally sound unless that it causes a little bit of inconvenience and discomfort. So that those things are part of this transaction actually overall. The tax payment and the tax collection, it's part of that. So Mr. Rahman, thank you. Wonderful to have you, and I'm very happy that you were very forthright and in summarizing the whole 4 years journey so quickly, and also all those tools which have been developed to make it to aid the process of digitalization in the country, and how the GST is so much in harmony with Digital India mission and the digital economy, and the direction in which we are moving or taking longer strides, where the GST will further oppose some of the measures which you suggested, that how they are going to merger of e-way bill and e-invoicing, etc. All these things, and finally the whole data getting populated in GSTR1. All those steps maybe will be major steps to facilitate, make life easier for the taxpayers. So thanking you, and we are very happy to have you today.
Yeah, thank you, Shailendra. Thank you all distinguished panelists for having a patient hearing. Best wishes for your webinar. Thank you.
Thank you.
I will take a leave.
Thank you so much, sir.
Thank you, Mr. Badri.
So we are back to our distinguished panelists, and I would like to request Mr. Chinoy, to talk about, he has heard Mr. Rahman, some of the measures we've taken, and he himself being such a huge repository of a lot of information coming from industry and trade, a lot of issues being shared with him, with FICCI as a premier, the trade association. So maybe, sir, you would like to share some of your, the ideas and the thought process in this area.
So, thank you, Mr. Shailendra for this opportunity, and I want to thank TIOL for actually enabling this to happen. I also need to recognize my colleague, Mr. Sridhar, who is a former member of the CBIC here. So, when Mr.
Welcome,
Rahman,
sir. If he's around, let me welcome him, sir.
Yeah, he's unfortunately logged in my ID, so you see 2 Dilip Chinoys, and I'll leave you to guess which one is the right Dilip Chinoy and which one is another. But all the participants here, thank you. And I actually want to compliment, and Mr. Rahman is not here, but I really want to compliment the entire government and, congratulate them on, first of all, it is the anniversary, 4th anniversary of the GST system on 1st of July. And I think the presentation that Mr. Rahman made today about the initiatives that are actually taking place in the government and the type of efforts they're making to ensure, one, compliance. Second, also, he said nudge. If you saw his presentation, he said nudge people with reminders, etc., and actually making it transparent. But there are some sectors, where and this is all about digitization. You, in your opening remark, talked about the digital economy growing from 800 billion to 1 trillion, and actually what you not really mentioned, but actually came up in his presentation, was that the numbers, I mean, the size will grow, in one rate, but the numbers that who will participate in the digital economy, either as consumers or as suppliers, and the number of times that they will actually participate in a transaction in a day will exponentially grow. And therefore, the systems and processes and all need to keep pace with that exponential growth. Mr. Rahman did mention very clearly that his whole ecosystem is being looked at by other states and other departments as a model ecosystem. But with COVID actually forcing digitization of services and other things, in a way that has not happened in the recent past, I think the challenge for the digital systems and all to keep pace with the technology actually comes in. One of the ways that you look at the digital economy and you actually say, let's just define it as e-commerce, right? And how do you define e-commerce? What constitutes e-commerce? A lot of the GST innovations that were done, whether the QR coding or anything, are very good for, the eBay bill, are all good for physical goods. But I think, going forward for digital transactions, for both within the country, B2B, B2C, in some cases, it may even be C2C, right? You may not even know that happening. So we need to enable the systems there, and we need to actually have a good understanding on the clarity of what is the taxable amount and what is not the taxable amount, I mean, that is a very important thing. One of the things that the GST Council has done in recent past has set up this task force on, let's say, gaming, and there are multiple things on gaming, right? And I think with the advent of technology and the growing pace of digitization, we need to see, and for example, we need clarity. And one of the terms of reference of that, is different things. And there are many different discussions and, court cases and all things happening, and many judgments in terms of what is a game of skill and what is a game of chance. And then how do you distinguish between them? And of course, if you have a game of skill, then it does not fall in the category of game of chance. So, clarity in the definition. And then looked at what part is taxable and what part is not taxable. I think that clarity and that I think also needs to actually come in. So I think there are just 5 things that we need to look at when we move to a digital economy. And I talked one about clarity, which was, I just said, I gave to gaming as example. Second is the whole system of compliance, right? Both onshore and offshore. How do we ensure compliance and going forward, and a clear communication with the players both in India and overseas on the compliance. The third area is convergence of systems. So one, we talked about eBay bill, and you talked about your payment, etc. here. But if you look at the small and medium industry, and if you look at how can we look at a convergence of systems between the eBay billing system and the TREDS system? where you can actually have, some bill discounting done for MSMEs and for the others, automatically going in. And both the systems have to talk to each other. And I think they've done it for some particular set of taxpayers, but can you increase it across the system? The third, and this is really, Mr. Rahman actually talked a lot about, is about the communication, between the taxpayer and user. And, one of the major digital innovations that is happening today is text to voice and voice to text systems, right? And how do we enable, a lot of people who possibly don't have a smartphone, right? Or don't have a computer system in there to actually be part of this and going forward. So I think, if I were to just say that, congratulations, it's great. We need to have, clarity in terms of certain things when you move to the digital world. There are many issues. Let's take an example. Third is, promote compliance. Third one is really convergence of the systems, and fourth is to increase communication so that both the taxpayer and the users and all have clarity going forward. And of course, the system, digital technology and digital things transform so fast. So you need to have a speed of change, needs to be accelerated, but that is beyond, capabilities here. And, we need to look at it. But I think the GST group and the government is doing a good job going forward, and with a little more efforts, this will actually be accentuated. So thank you very much for this opportunity to be here.
Thank you, sir. Thank you. You rightly said that if you put more efforts, will change the scenario completely. So let me go to Mr. Pratik. Then, Mr. Pratik, maybe you would like to speak for 3-4 minutes on this issue. Your observations about this. The GST.
Sure. Thanks a lot, Shailendra. And I think Mr. Rahman did cover a lot on what has happened, right? So let me focus on what perhaps can be done still. And Mr. Chinoy did talk about some of that. But I'll just try and sort of link some of his ideas with, how technology can help, right? So see, the way I see it is that technology can be used in 3 broad segments, right? One is compliance, to ensure that tax leakages are less. Second is as a taxpayer service, right? And third is for tax administration. Now, on the first front, on the compliance front, a lot has been done, right? I mean, you have all of these things, which is vendor reconciliation, ensuring that there is auto population that Mr. Rahman was talking about. Some of these things are still in the works. On the taxpayer services, some element has been done, but a lot can be done, right? So, for example, SMS-based nil return. That's a great initiative, has reduced the workload on the GST system. But many things can still be done, right? One is, providing some kind of a dashboard to the taxpayer. So today I have 30 different registration. I have 30 different logins for the GSTN. If I have one dashboard and I can look at my entire PAN-wise view, that in which state how much I'm paying, in which state how much credit I have, that'll be a great service to the taxpayer. The second point is on the huge data bank that the government has. And till now, we have used that data only for GST purposes. I think what government can evaluate is there any way to use that data for taxpayer services? Today, you have data as to which material is going from which part of the country to which part of the country, right? If I want to set up a factory, let's say for steel manufacturing, and I want to know from which place scrap is being supplied, that data is available with GST. So you can perhaps monetize it and provide that to the taxpayer, as a value-add services, of course, anonymized and without taking names, but that's a great value that can be added. The refund applications automation, Mr. Rahman did talk about, because that has not happened, as manual, and if you have some API-based integration on that, it can be done. Vendor ratings, there is a provision in the GST law, but it has not yet been made effective. Just like a CIBIL report, if you have a vendor rating report, right, it will help me as a purchaser to ensure that I deal with tax compliant vendors. Coming to the tax administration, and Mr. Chinoy did talk about voice to data, data to voice, etc. New concepts like artificial intelligence, like blockchain. He did talk about, Mr. Chinoy was talking about, how you can use that data of e-invoicing, e-bill, etc. for funding or bill discounting. There you can adopt things like blockchain, e-assessment, e-audit. All of that is part of that which their technology which is available. How can you use technology for tax administration? So you can have all the case laws at one place. You can ensure that different states are taking a consistent view. You have a database to say that, okay, which sector is doing what. Sectoral analysis you can do as part of that administration. So I think time has come now to look at the next wave of technology. CBIC CBDT integration is a very important part of that. GST data is now available with income tax authorities, and many of these things that you read in the newspaper, as soon as the income tax investigation starts, you have GST investigation starting almost at the same time. That means the data that you are providing to one set of authorities is being shared with other set of authorities, and that is being done through use of technology. I was talking to the government officer and saying that a lot of people are claiming refunds of huge amount of GST, but they're not filing the income tax return. That income is not disclosed in income tax return. So all of that convergence is already happening. But I think we are on the right path, and the GST base has expanded. GST collections is going well. If we use technology for tax administration, I think that'll be a game changer.
Thank you. Pratik rightly said that technology is going to be the real catalyst for a lot of changes which could be introduced by the GSTN and maybe other agencies like CBDT, MCA, for instance, the data sharing with a lot of these agencies. So let me now go to Mr. Badri. He would like to share his thoughts on this.
Thank you, Shailendra ji, and thank you, Pratik, Sridharan ji, Mr. Dilip Chinoy, and Shanti Bhushan. So I have a few points. I think Pratik has very nicely summarized how, for example, digital is transforming tax administration. I come, of course, from a breed of lawyers and litigators. So I always think of things in a negative way. Not necessarily wrong, but I just always am erring on the caution. I think what GST has done is really well for physical goods, like what Mr. Dilip Chinoy also said, that when it comes to physical goods, I think we understand that because for 70 years, we have figured out how to tax this. Okay, sale of goods and sales tax was very, very well-known regime. Excise was there for the longest period of time. We only touched upon service tax in 1994. And even that, we are looking at what I call as physical services, really. So in the last few years, that digital has really taken off. Okay, and I don't think we completely understand digital and how digital is so different from your physical goods and services. Digital services are completely different. Okay, and I have been doing a lot of work in this space, and I feel that there is likely to be a lot of disputes and issues, not because there is any issue from a tax evasion point of view. It's just that there's a difference of opinion from between the department, how it looks at it, and what actually is happening in digital services. I think Mr. Dilip Chinoy touched on one area, which is online gaming, right? So today, for example, there is a group of ministers talking on online gaming and valuation with respect to online gaming. Okay, so the general feeling is we've kind of classified online gaming along with casinos and race horses, but realistically, it's a completely different element. So it's a technology-led industry where the technology companies are merely providing a platform for the players to really play with each other. Okay, so for example, let us say you were to play esports, so you could all get onto a platform, and then you could play against each other. Our generation probably doesn't understand that, but if you ask any millennial, okay, they completely understand this kind of a situation. And there can be subscription services to a platform in order for them to be able to do that. But then you could play against each other, but then you merely play a subscription fee. In online gaming, you go one step ahead, what we call as real money games, where you pay a subscription fee to the platform, but you also have some kind of a value which is kept, which is ultimately distributed as a winner of this thing. So for example, if you went to a tennis tournament like Wimbledon, so you have spectators come in, that fee is taken, you have advertisement revenue, that fee is taken, and that becomes part of the pool for the prize to be paid to the winner. So instead of these two happening, you actually have people come in and pay for themselves, and then the winner takes it away. Now, one of the big issues is that when I enter a game and I pay 100 rupees on it, and 20 rupees is retained by the platform for the services of technology platform, whether the value of service is 20 rupees or the value of service is 100 rupees. Okay, the department always thinks the player paid 100, he received something back, therefore the value should be 100. While the technology platform says that no, I have not played against the player, I've only been an enabler. I have provided a platform in which a person comes and plays. My gross gaming revenue is only 20 rupees, and that's on the value on which I must pay. But from a valuation perspective, because there are two numbers, 20 and 100, our department always looks at a higher number and tries to tax it. But realistically speaking, that will have all sorts of issues. For example, if I play a game without any money, okay, are you saying that for that game it is 20 rupees? But the minute I have someone where money is paid, it doesn't come to me, it kept in a pool and then returned back. That's something which is there. Always, not only in India, world over, there's a problem because money is flowing from a consumer to a business and then going back. So valuation in this sector, especially online gaming and online services, is a very, very big challenge because what is coming in and what is going out is different. Like what Mr. Dilip Chinoy said, we are in an era where it is B2B, B2C, and C2C also. Okay, and C2C doesn't work very well in GST because GST is one way, which is from business to consumer. When it comes back from the consumer, we have issues. Similar in case of insurance, for example. Okay, I always believe the insurance services should be premium minus payout. That is amount of money I put to the insurance company minus what the insurance company ultimately pays out. That should be the difference value. Okay, we always tax premium. We never tax the give a reduction for payout. In most mature economies, that concept is there. So what I'm saying is that in the online space, there has to be a lot more flexibility and thinking in terms of the policy that we want to have. And this is going to have an impact on other sectors like agri-tech, health tech, where, for example, there's going to be either a nil GST or a lower rate of GST. There are going to be all sorts of issues with respect to consumers and the institutions interacting, and only a portion of it is being earned as a revenue by the technology company, which is giving a platform. So realistically speaking, valuation in the online space is going to be an extremely important space. And if you're going to go for a 3 trillion, 5 trillion economy, where say 2.5 to 3 trillion is going to be coming from digital space, I think we need to spend a lot more time trying to encourage and enable it, okay, rather than thinking of it in traditional terms and try to tax it. So those are my opening comments. I think it's done really well on the digital side of tax administration. I just feel that the tax administration now have to understand digital in the digital economy. That's where I think we should be moving towards.
Thank you, Mr. Badri. You have really touched a very, very sensitive issue of valuation. Let me go to Pratik then. Pratik, for instance, Mr. Chinoy talked about online gaming, and Mr. Badri nicely explained this. The complexity involved in the whole transaction. So, I'm pretty sure this. If you look at this online gaming, this GST as a policy tool, and also enabler for the digitalization of the economy. And also one of the major magnets for FDI, the foreign investment, attracting foreign investment. This online gaming, I guess, is one of the, the sunrise sectors today. If you look at the number of users, and as millennial generation apparently, or maybe the generation Z will join it later, or probably they have joined it. I'm not very familiar with all those games, but I'm pretty sure that huge number of users are there. In fact, I still remember that one of the Man Ki Baat episodes, Prime Minister also talked about PUBG, where he was suggesting, not to use blah, 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 or use it not during the exam, etc., etc. So, this online gaming, it has reached, or it has a scale such a height, that really requires a different set of thinking among the policymakers, how not to club it with, pure gambling and betting perhaps, or maybe horse race or, something like that. But now this issue is with the group of ministers. How do you think, as a fiscal expert, that, this group of ministers should be actually dealing with this issue? And this is one sector where good amount of FDI, possibly will come, it will generate employment, it will generate, or it will contribute to the tax kitty, directly and indirectly both.
Yes. So look, I think that while online gaming perhaps stands on a different footing than race course and gambling, etc., but issue from an interpretation perspective is similar, right? So one is there are two issues involved: whether it's a game of skill or game of chance, right? and because game of chance attracts a higher tax, etc. So that's an interpretation issue. The second is, as Badri pointed out, about whether 100 rupees should be taxed or 20 should be taxed. I think there is a very solid argument to say that only 20 should be taxed, because the remaining amount is as a deposit. I don't even take it to my PNL, right? As a online gaming company, I'll treat that as a deposit, and only the commission part, only the fees part comes to my revenue, right? So I think there is a very strong argument to say that. We would expect the GOM to look at international practices, what happens in other countries on this. Of course, there's a revenue side of it. We need to encourage more, particularly in a pandemic situation where people are sitting at home, and for them, online gaming is a source of entertainment. The other aspect is that if at all GOM feels that no 100 should be taxed, like I could have a different view, Badri could have a different view. But let's say if government takes a view, then they should at least provide an exemption for the past period, because these guys cannot go to the customer and collect GST now. So that should be implemented prospectively and not retrospectively, right? I mean, of course, there are ways and means to provide exemption for the past. So that is my expectation as far as this group of ministers is concerned. I agree with Badri that the online gaming part of it needs to be understood much better by the authorities. And I'm sure that GOM will. They should also give an opportunity to the industry to come and present before them and talk about the nuances of the industry, because it needs to be understood well before they conclude on what the implications are.
Pratik, only one thing. Do you think that the current valuation provisions, mainly Section 15 of the CGST law, as it stands today, so do you think much of repair work or renovation work would have to be done in the valuation provisions if you really want to make it meaningful for all these sunrise sectors? Or do you think they will supplement this with, other circulars? Then once again, it will go to a court on a challenge. So what's your view?
Ideally, the valuation provision itself should change, right? I mean, that's how it is. I know what you're talking about. And maybe Badri would have studied it much more deeply. But ideally, that should be done. Through a circular, if they try and resolve it, one circular leads to more litigation, right? So if they change it, ideally retrospectively, if they want to do it, or if they want to do it prospectively, at least provide exemption for the past. I agree. It should be through the change in the valuation provision itself, rather than issuing a clarification.
So I have two.
Yeah, please.
I have 2 points, Shailendra ji, and I'll quickly just before you move on. Okay. One is, as Mr. Sridhar asked, whether there should be a valuation provision. I think according to me today, if the valuation provision is applied properly or understand the business model, definitely what we are asking, because that is what ultimately is coming to me in my pocket, it should be applicable. That is there. But right up front, when in 2017, this was coming in one of our representations that we made, we specifically asked that you clarify and clearly specify that the value should be what I ultimately account in my books, and not what Pratik said as this thing, because we always expected that this can be a problem from that perspective, right? The second aspect is that just to kind of this game of skill and game of chance that Mr. Shailendra touched is very, very important. Why? Because if you take, for example, our Schedule 3, it says actionable claims not in the nature of lottery, betting, and gambling, it is exempt. Okay. So if you determine that these are games of skill, then it is not in the category of betting, gambling, and lottery. In which case, the 100 rupees as a whole or 80 rupees becomes an actionable claim, because ultimately it fulfills the definition of an actionable claim. That's what Sunrise Justice Rumapal explained in her beautiful judgment, explaining what's an actionable claim and why, for example, a lottery ticket is an actionable claim. Very same arguments apply with respect to this. In which case, you go out of it. So in which case, you can have all these nice valuation provisions, but ultimately it will break down because your exemption is provided ultimately for actionable claim. So that's where there is a dispute. So we always wanted that you never contemplated taxing 80 rupees because it's an actionable claim, because it is an immovable property in which you are going to have possession contingent on a certain condition, which is what is required of the definition of an actionable claim. And therefore, you don't go for the past. Okay, you clarify it. You put the valuation so that it is clear. You want 18% on 20 rupees, no problem. You want 28% on 20 rupees, no problem. But don't make it in such a way that there is no, because The minute you make it's 18% of 100 rupees, we can argue constitutionally there is no relationship between the levy and the value. Okay, because the levy is on the value and you're taking something completely different. You may remember, Sridhar sir, on the cigarette cases and other cases, we used to have this argument that the levy would be on something and the value should be something else. Court allowed you to expand, but not to the level where there is no correlation at all. Okay, so that's the reason why I feel that there is a real requirement to understand this area. Game of skill, game of chance, we need to understand. We must clarify what is valuation and then be able to have this interlink between. Otherwise, I feel that this is going to be an area where there's going to be a lot of litigation and never ending in that nature.
One more question to the panelists on this taxpayer services. Pratik touched upon it. Mr. Rahman touched upon it at large. Now, one thing, we did the 4 years program also for the information of the panelists. One major cry and question from the audience was also that the government of India's assistance with regard to enabling credits in the ITC regime at large was always suspect in the 4 years because many of the matters traversed to court. Now you have such a powerful digital medium with the government. Everybody in the panel has now talked about it. So do you feel as panelists that the government has done enough for enablement of ITC, or there is much of distance to travel?
So
Maybe I'll start. Look, I think one philosophical issue that we have all had is that for the vendor's non-compliance, why should you penalize the purchaser? But we have passed that state because that's a policy decision that the government is taking. The issue is that today, when I process the invoice, when I make the payment to the vendor, at that point in time, it is very difficult for me to know whether vendor has uploaded the invoice in what we call as GST at 2A at my end, or even the e-invoice number which is coming, whether it's a valid e-invoice number or not, right? So what the government could definitely do is they can integrate my ERP, they can facilitate that integration between my ERP and the GST portal to automatically ensure that when I make the payment to the vendor, by click of a button, the information could come from the portal to me that this is a valid e-invoice or not, okay, by the customer. And therefore, at that point in time, I am confident that I am dealing A with a compliant vendor and B, my e-invoice is valid, because without e-invoice, I can't get the input paid later. Theoretically, still there is a possibility that despite e-invoice being raised, he may not put it in the GSTR1. That's a theoretical possibility, which is still there, but very, very remote chance. So if you integrate that vendor compliance thing with my account payable and enable me to do that, then that'll be a great facilitation for the taxpayers.
Yes, Mr. Sridhar, I will see that. Yeah.
Sridhar sir, I just want to add to that point because I just got this thing. And I'll just take 2 minutes only, sir. One is it's a question of who bears the risk of non-payment between two innocent parties. One being the person who has paid money to the vendor, and one being the government, which has not received credit from this. So ultimately, it is like a classical situation. There are two innocent parties, and who should bear the risk? I really feel that putting the risk largely on the person who's already made the payment to him is unfair. Okay. As you know, when this judgment came of Mahalakshmi in Bombay High Court, you will remember Mr. Sridharan had argued that matter. I was there with. The reason why the court got swayed to say that this kind of credit matching is required is because the Advocate General then told the court that, sir, on 1st of October, one vendor pops up, okay, in Dharavi, issues invoices to the tune of 1,000 crores. 15th of October receives payment from this and disappears on 30th of October. And therefore, all of this tax is completely gone. It was completely related to fake invoices. Okay, it was never related to genuine invoices. That was the context in which the entire thing came. They said there is therefore a purpose with respect to matching. And therefore, they upheld the fact that credit will not be eligible under Maharashtra VAT because of the fact that you have. That is a Mahalakshmi judgment. That was an interesting case where they upheld the constitutional levy of matching of ITC credit. That happened in Bombay High Court. We were witness to that. But today, with sophisticated systems where you're able to track all of this, I don't think that concept ever even remains. And the risk of that kind of a credit default should not lie with the person who is the vendor, or sorry, the customer of such goods and services. I really feel that much more should be done with respect to that. And I think some level of risk should be with the government, like what Pratik is saying. You can have more and more systems in order to ensure that there is better tracking of this and you're able to close it at an earlier stage, okay, rather than put the burden on it, because the working capital blockage of some other companies can be debilitating because they're running on very razor thin margins, okay, and that can be a real problem for that. I really feel that once you have 18% GST as the default, okay, a small percentage of credit not being eligible can have a real impact on the people. Therefore, I feel that we should do more in that space.
Yes, Mr. Sridhar, in fact, I mean, if we look at the, the growth in the digital footprint, and of course, after some time, I'm expecting maybe in years' time or so, all these rules will go away. The rules which are bothering you too much, I mean, every taxpayer that way. But let me go back to Mr. Badri. In fact, he touched that point with the valuation aspect of it. But I was wondering, looking at this group of ministers, where we have 6-7 state ministers, state finance ministers as a member, and they are going to make a suggestion to the council, with respect to this, for instance, game of skill, online gaming. I mean, what is the way forward? How do you look at it? Because all the states, because it's a part of this, the entry is there in the state list, 7th schedule of the constitution. Naturally, since they are clubbing it with betting and gambling, etc., it's part of the state list. Therefore, every state has got a legislation and their own way of dealing with it. But since the whole process has gone online, and that is the biggest challenge, before the policymakers, and in fact, one of the premises and the pillars on which GST stands today, that India being a single common uniform market. So similarly for online gaming also, if every state is going to have a legislation, how exactly this sector is going to flourish, how exactly this is going to attract foreign investment, how this is going to generate employment and contribute to the kitties. So I mean, how do you look at it? What is the way forward?
Look, Shailendra, I think that whether it is 18 or 28, okay, that's there for the courts to decide. Frankly, I mean, whether it is game of chance or skill, I doubt whether the GOM, has that mandate. Their mandate is to look at the valuation. In other words, whether 100 should be taxed or 20 should be. It may be interlinked with game of skill or chance, right? But their mandate is to look at valuation. And I think they will look at the valuation. Of course, there are some states who would be impacted more, like Maharashtra, like Goa, like Karnataka would be impacted more than others. And I think some of them have representation in this. Of course, there is a joint secretary, TRE, who is a convener of this, of this GOM. So they will, I just hope that they give industry an opportunity to come and present their case properly. Because as Badri is saying that this is it's at a nascent stage, still growing. Okay. I think any investor wants certainty. If government today says 28% on 100, let's say, that's fine. I mean, let us make it prospective. Let's not make it retrospective by way of a clarification, etc. Because then there is no certainty and there is no why, and that's where the investment climate gets issued. Although, I mean, I doubt that they would say 28% on 100. Frankly, I hope that they examine this properly. But my only point is, from an investment point of view, it is certainty and clarity rather than whether it is 18 or 28.
Right. I mean, you rightly put.
I just want to add to what Pratik is saying, a slightly different view on some of this. One is, I think, like, first, if, for example, the value of 100 is the base on which they are going to impose 18% or 28%. Think about it. I earned in some games, the real money that I'm taking out is 2% to 5%. So 5% is buy service fee, 18% is the GST. Okay. Plus you add TDS, which is on a gross basis on this thing, which is 35% gross on any amount which is above 10,000 rupees. Okay. And then what therefore remains in the price pool ultimately to be given to the person is very, very low, which makes there's no incentive for him to play the game. Okay. Because he's taking the risk, but not getting the reward. What will happen really, according to me, is that these games will go underground. Okay. This happened with cryptocurrency when RBI brought out a circular a few years ago saying very clearly that banks will not deal with cryptocurrency. What happened? Cryptocurrency fellows all went to Singapore. Today, a lot of the people in India still own cryptocurrencies, but it's just underground. That is completely lost to tax, right? So either you say that it is like what my father used to say, that how a cub should be carried by the mother tiger. Okay, it should hold enough that it doesn't drop it, but not so tight that it will kill it. So that's where the real issue is. The minute you make the value 18 on 100 or 28 on 100, it is like the tiger holding the neck of the cub and killing it. Therefore, I feel that it will ultimately result in a negative tax coming into picture, not increase in tax. That's first point which is there. Second is, I have very interesting thing about this group of ministers. So, for example, you take in Gujarat, betting and gambling is completely not allowed. Okay, there's no casino, there's no lottery. Gujarat se prime finance minister is there. Tamil Nadu recently has banned games of skill of all nature, okay, on which real money is being paid because they feel it is under betting. There is a challenge to the constitutionality of that itself. Okay, and then we have other people who are there. I feel center has a better grip on games of skill, games of this thing, and rather there should be more time spent by practitioners as also the industry, maybe FICCI, Mr. Sridharan and other people, to educate the state ministers with respect to what this really means and how it is. And I think that's really going to be the key to the success of this area. Okay, so if we leave it to the center, I think center understand because it's been trying to tax lottery in some form for years together under service tax and lost every time because they used to go to Sikkim High Court and Sikkim High Court used to strike it down. Okay, and for whatever reasons. But I feel that where there is a real core issue is to be able to go to the group of ministers, explain to them what is really happening, and then for them to be able to understand this. I think it's really that's the area where there needs to be a lot more advocacy from a policy point of view, from my view perspective.
Right. So, in fact, Mr. Badri, this very interesting point. The fact that India has overtaken USA in terms of being the #1 country in terms of user base for the online gaming. As per the Niti Aayog report, India has become #1, and US, has a kind of $6 to $7 billion market, the online gaming. And if India, of course, probably the pool size, the price size will be different there, so the size of the market in terms of turnover will be different. But so far as India is concerned, number of the user base, is very similar to GST. That Mr. Rahman says that now we have 1 crore 29 lakhs users. But if you look at the number of actual the contributors to the tax kitty, that will be only about 6 to 7%. So similarly here for the online gaming, what are the best the global practices? How exactly the other countries are taxing, and why India should be different? Or maybe it's India is a bit late now. They should move forward quickly and let the sector grow into a big sector and let it contribute, as you rightly say, 35%, the withholding tax, for instance, and in the winnings, as per the Income Tax Act, etc. And in any case, the platform operators also, they must be contributing to the corporate tax kitty. So from different areas, there is contribution from the industry side. So the whole idea is that very similar to the IT sector, we incentivize the IT sector in the beginning, and it actually emerged as a the gigantic and a giant the industry sector. Similarly, this sector has the potential where younger generation people are involved, and that is the generation which is spending a lot of money on online gaming. We hardly spend any money on gaming, but that generation spends a lot of money on gaming. So I mean, you tax it, but you tax again since you are applying the principle ad valorem, the principle of taxation. Then it's better that let it grow and let it then you tax it, then you collect more revenue. So how do you look at this international perspective?
So internationally, very interesting question. We did a lot of research internationally, what is going on from this perspective. So I'll give you some ideas. The old theory, which is the European Union theory, because European Union was set up in the 1950s after Second World War. The theory has always been that if you're not able to determine what is the value addition, we will not tax it. Okay. So for example, you'll see financial services are not taxed in European Union, it is exempt. That is, they'll only get the input tax credit based on that. Similarly, gambling or gaming in those countries is exempt completely because they say money is coming from the consumer. I am not able to determine what is the value addition. Therefore, rather than tax that kind of a thing on some notional basis, like 100 rupees or 50 rupees or whatever, I will exempt it, and whatever input tax credit is being this thing, we disallow it and we take money from it. That's the old theory with respect to financial services and gaming and similar kind of B2C or C2B kind of services. The newer theory should try and tax some portion of it. If you see South Africa and other things, where they tax the amount which is being collected as fee as opposed to this thing, and trying to understand what is the interest or what are the elements in financial services which are likely to be taxed, fee and interest component. Similarly in gaming. So we saw very interestingly in Ireland, for example, that there's a law with respect to GST or VAT, even though it's part of European Union, where the focus of gamings, which are not of betting and gambling, that is games of skill, is taxed on the basis of value addition. That is a gross gaming revenue. That is the money which the operator is earning from the game, rather than the entire ticket. And that seems to be the valid way in which most of the countries are moving towards. If you take, for example, some other countries like Malaysia and other countries, the best example I think is Ireland, because it's in EU where betting and gambling is exempt completely. But when it comes to games of skill, they've come up with a provision which clearly explains why, for example, they're only taxing that portion of it. And I think that's a fair way of being able to tax it, which is you tax the income which is earned by the operator, you tax it fully at 18% or 15%, whatever you want. Let him pay income tax also on it. Over and above that, whatever is amount which is remaining, that goes into the pool, which is going for this thing. In any case, you're earning 35% TDS in India with respect to those payments. So there is sufficient amount of tax which comes into picture from that perspective. So that's typically how internationally we are seeing the trends. So the old theory is that no tax on it, input tax credit. The new theory is this thing. But even then, nobody is going and trying to tax the entire 100 rupees. People are all looking at 20 rupees only and to see how best to tax it. Either there is no tax on it, or there is tax to the extent of 20 rupees on which the full rate of tax is applied. So that's generally, I feel, the way in which the internationally things are moving in this direction.
One thing, Shailendra, with regard to the digital GST, there's one important point the panel raised about was with the maturity of e-invoices, when will e-invoices and the e-way bills merge? Because that is the next big expectation of the industry also. See, because if you're touching on digitization, so we must touch on this also, because you see, actually we started on 1/4/2018, we are down 3 years now. And therefore now if you feel maturity has stepped in about, let's say 1-2 years with 25 crores or next 15 crores and even 10 crores if they go down to also, then, I mean, should there be a kind of a roadmap that this is the roadmap with which we'll go on e-invoices? This is the roadmap we'll functionally remove e-way bills.
I think, Sridhar, it will happen soon. I think initially when it whole thing came in, there were statements made from the government at that point in time that eventually it will merge. We don't know the timelines as yet, because if you look at, of course, e-way bill is for goods and e-invoicing is for goods and services both. And e-invoicing does not have the details of consignor, consignee, etc., etc. But there are optional fields provided already. So I think they're thinking ahead. My own guess is it will take another 1.5-2 years to merge, but it is on the way, to my mind.
Yeah, Mr. Sridhar, in fact, you probably did not hear Mr. Rahman properly. He gave us a hint, very clear-cut hint, that, they're thinking in terms of this. And probably they're thinking more in terms of stabilizing the B2C, or probably the rolling out B2C, which is getting postponed, again and again.
Yeah, we are giving extensions also. And the floor limits also will have to come down further.
Exactly. So I think the government, has got a lot of intelligence and inputs that at B2C level, there is a lot of tax evasion. And that is why they are a little, jittery about it, that they want to introduce quickly, B2C, etc., with QR code, etc., without QR code, how to implement it. A lot of confusion there initially. And I think because of this pandemic, the whole thing was deferred, but they are going to do this B2C first. And parallelly, they will see that if that e-invoicing thing stabilizes, e-way bill in any case more or less is stabilized. So then probably they will think in terms of integrating both the data, etc. But it will happen. It will happen, as Pratik rightly said that. So I think, do we have some more point to be raised from audience side, or maybe should we throw it open to the audience, for some questions, etc.
There are 4 question answers on the question answer board.
Yeah, so Mr. Sridhar would like to read that.
No. You would like to. You please read it. Maybe I'm not getting certain things here.
Okay, some questions are there. Okay, so we have one gentleman, Mr. Gopalan, is suggesting that GSTR 1 invoices uploaded more than 500 number invoices. Why is report not getting from GSTN in Excel format? Industry is happy it can provide and automate in Excel format on digitalization initiative. Yes, it's a good suggestion. There's something which it's a tool which should be made available to the taxpayer. So that's a suggestion. Then we have from Ava Sharma, should the GST Council imply a consultative approach with the industry on the valuation of digital economy services such as online gaming? Okay, I think we have discussed a lot of the tentacles of the online gaming industry. Most of it, including the international perspective, etc. And the way forward, perhaps, as rightly suggested by Mr. Badri, that for the GAM, first step should be that they should identify online gaming as a game of skill rather than the game of chance. The moment they do that and they really utilize their own skill to identify this skill, then things will be much easier. Then this issue of valuation will also go quickly. Then the second issue, perhaps they will have to fight a kind of long run battle. Is for uniformity. Some kind of uniform national level regulations have to be put in place, which is not there. Because the state level, every state will have, somebody will come out with an ordinance, somebody will come out with a new legislation and different kind of rules. So probably, if this sector has to grow, this particular entry, probably, the states will have to pass on to the center again, or maybe, to the common legislation could be enacted or something like that has to be done in the long run. So we have Mr. Mani here who is asking this question. Matching system under 42, section 42 not implemented right now. There is no intimation of mismatch happens through portal. In this scenario, how to treat the ITC taken? Is it self-assessed or provisional or final? As procedure under 41 is not prescribed till date, this doubt arises quite often. So who would like to touch this? The matching system, maybe Mr. Badri?
No, in my view, it cannot be treated as a final by any. I think it has to be self-assessed. A lot of people believe that so long as I have the invoice and I paid the tax to the vendor and vendor has deposited tax, my credit cannot be touched. So it will be self-assessed. I think this matter is already there in courts. So we'll have to see what shape does it take. But that's a point I was making, that how government can enable me to sort of, as a purchaser, to do a real-time verification. I think that's very, very important. And I will just also take the last question, in the interest of time, and maybe Badri can come in thereafter. What is the reason for making amendment of Section 16 of IGST Act? This is for rebate of GST, where you pay GST and claim a refund. And it seems to me that because refund of capital goods is not allowed, and under rebate option that facility people were availing, that's the reason why it has been done. But it's only going to be done for few sectors and not for all. And we are waiting to hear more from the government on that.
Yeah, is there something Mr. Badri would like to add here?
No, I don't want to. I think Pratik has nicely captured it. So I don't want to add anything further to it at the moment.
Okay, so let me go to Mr. Chinoy before we wrap up the session. For the day, we have already exceeded the time frame. But I must thank the attendees and audience that they are still around, and probably they want to hear more of my panelists. So I have got a very large portfolio of questions which I can always share with my panelists, provided they have the time and no other engagement. So, Mr. Chinoy, are you around, sir? Okay, probably he is not around. So if there is any other question from the audience side, then of course there is something coming. That there are lots of refunds pending which were filed initially on manual basis. No tax officer is interested in processing these refunds, especially in the COVID situation. So any plan to digitalize such claims for taking this on fast track? Okay, so yes. Pratik would like to say something on this?
No. I think some of these issues we should raise with Mr. Rahman. I think he was kind enough to say that if there are questions of such nature, difficult for. We of course agree with the comment, with the concern. Difficult to put a response to that. So I think we should collate this and maybe send it to Mr. Rahman for him to examine this.
Yes, this is something which revenue should be answering, if not we. Yeah, Mr. Sridhar, anything if the last
only one thing is that See, this question that came up in our 4th anniversary, Shailendra, that is it true that the digitization issues are taking more prominence than the actual tax framework itself? Is there anything that, because Shailendra, it was asked to all our panelists who came on the 4th anniversary. So I think both should answer, both Pratik and Badri should answer. If Mr. Chinoy was there, I would have asked him to answer also.
Yeah, I think Mr. SP Singh was supposed to be with us, Sir, are you around, sir? Oh, Mr. Chinoy is here. Yes.
I'm here, Mr. Shailendra.
Oh, sir, how are you, sir? Good, sir. Good to have you. In fact, we have, a former member of the CBIC side, CBEC rather, right, sir? I mean, when you retired, it was CBIC.
I was member CBIC, and I was involved while the initial GST law procedures were being.
Right, sir. Correct, sir. Absolutely, sir.
I have a little bit of sense of GST. And now I am working as a tax advisor with FICCI.
Right, sir.
Only a few points I will share with you with my experience in working with FICCI. Now I find that after GST, the feeling which we get from the industry side is that they can ask for anything in GST. The pre-GST era, which they never thought there is any issue or any problem. Post GST, even they are asking almost everything. So one is that, and second, initially we were trying to government to work as a consultant to industry. Even sorry, Mr. Badri and Mr. Sridhar, on this online thing, a representation has come to FICCI. I'm not exactly sure what exactly we are asking. Because that representation basically says that government should clarify that game of skill is not covered as in the gambling. That is already in the law. They say, please take out game of skill from your Rule 31A. Game of skill is never in Rule 31A. There what it covers is betting, gambling, and horse racing. And the question is of, as rightly said by Mr. Badri also, his question is only of facts and interpretation. Whether it is a game of skill or it is a gambling. Now, I don't think government can clarify, and government will definitely keep a distinction between gambling and game of skill. We should not expect that they will treat the gambling at the same footing as the game of skill. So, and if we ask them to clarify what is game of skill, who can clearly clarify that what is game of skill is well known what is a game of skill. There are several judgments and everything, and it is a fact-based thing which will depend from case to case, like rummy, whether rummy is a game of skill or not. We can argue that rummy is a game of skill. Bridge, we can argue that is a game of skill, but that flash or three patti, we can't argue that is a game of skill. So it's basically a question of fact. And when it is out of Rule 31A, government is not saying that we are taxing you at the full value of 100% or something like that. So what we should ask from the government, the biggest disappointment to me in this GST law is our advanced ruling setup. This advanced ruling hardly has any. In fact, it is complicating the matter more. Advanced ruling means there should be a certainty. What we should asking for, please make is advanced ruling which has some real authority, whose ruling can be really respected, like we had earlier time, like we have in income tax side, or like we have. No industry is asking for that. For example, this game of skill or not game of skill, if a foreign investor is coming, there's a confusion. He can go to advanced ruling. Please tell me whether what I'm going to do, whether it is a game of skill or gambling. So he has a certainty. No circular or no explanation can explain this. So industry should itself be very clear what exactly we are asking and on what parameters. And then, like in the ITC side, there are hundreds of representation. Please give us seamless flow of ITC. We should be allowed this, that. we should also remember that basic objective of any tax is to raise revenue, raise resources. All these restrictions are placed because government wants to keep some money. If all these ITC are given, then probably rate of tax has to go from on average 15% to about 40%. Whether people will like it or whether government will take that gamble of having a rate of 30-40% and allowing all the ITC. So as a responsible industry, we should keep these things in our mind. Like the pre-GST era, nobody talked about inverted rate in that refund of inverted duty structure in service tax. Now, every representation is talking about inverted rate of service tax. So refund of that. So I sometimes feel that there is a too much unreasonable expectation from the industry also. And when we are going to government, we are not clear what exactly we are asking. And the best example which I have seen is this representation on this online gaming. They are saying, please clarify. What can we clarify? There is nowhere in the present GST law which says that game of skill is to be treated as gambling. There is no provision in the law which says that game of skill will go under Rule 31A. As per me, game of skill will be taxed only on that platform fee because the rest amount is totally actionable claim. What further clarification?
Sir, can I come in for a minute? I'll tell you why. Because I've been this thing. There are several investigations of games that are clearly games of skill, in which the department wants to tax on the entire 100 rupees. They say you receive 100 rupees, you pay on full this thing. So there are several investigations. So the industry wants clarity. You please clarify the game so that we can tell this thing. Because he said, I don't know, I don't want to read what is Sunrise, I don't want to read what is RMD Shamar Bagwala, understand what is game of skill, game of this thing. If the law says game of skill is excluded from it, then it makes my life easy, it makes your life easy. So there is one aspect which is there with respect to today. There are investigations going on that. With respect to this 20%, which we're talking platform fee, the reason why this entire thing came, either in the agenda, in one of the previous GST Council meetings, they had proposed a way of taxing this 20% as in the nature of a rate plus a special cess, the addition of which would amount to 18% of 100. Okay, that's the reason why there's a lot of concern. There is no issue that value should be 20, but then you apply a rate which effectively makes the rate as 18 on 100. Okay, that's really why this whole debate is started with respect to how to do that. Okay, and therefore it's a backdoor way of taxing the entire 100 as on 18% by saying that I'm keeping the value at 20 only, but now I'm going to make it as 28% plus a special cess, which will ultimately make the entire value to be 18%. So it's like whichever way you come, we are going to do that. So that's where the unfairness is there with respect to that.
If I recollect, I may be wrong, Mr. Badri, but if I recollect, all those things are with reference to gambling and betting.
No, sir. It is with respect to game of skill also. Very clearly, it talks about casinos on one side. Then it speaks about race course and specifically on online gaming. So all three are covered, and agenda was specifically with respect to that.
Then our representation should be clearly differentiating between game of skill and the gambling, and then asking for a clarity on that game of skill. Rather asking government ki please define what is game of skill, because you yourself know, you are the best person that nobody can define what is game of skill in black and white. It's on the fact based.
Now the facts that several High Court decisions are there, and apparently Supreme Court has also. So I mean, as so far as definition is concerned, yes. I mean, there should be separate legislation for that. So far as taxation is concerned, yes. That is where, since the issue is with the GM, they should clarify in terms of whether it should be clubbed with casinos and gambling, etc., or to be treated separately. So probably that solution will come very soon, sir. When the GM submits the report.
It was really very nice to hear Mr. Badri and Mr. Sridhar and Mr. Pratik Jain also. I gained a lot of insight. So thank you, Mr.
Sridhar. It's our privilege to have you, sir. It was wonderful to have you. And anybody who is sort of coming up with doubting this wisdom of this, it triggers more debate, and it's always better, wonderful to have more aspects or more information of it.
Somehow we should industry should put pressure on few things like having removing this, getting rid of this what you call anti-profiteering body that has served its purpose. It was initially for only 2 years. Now that phase is over. Now we don't need that, and this price should be left to the market determined price. Second thing is this advanced ruling, because industries, lot of problem can be solved if we have real advanced ruling authority. So thank you, Mr. Shailendra.
Sir, and third thing should be GST tribunal, sir. You're missing that.
That should be notified fast. Yes.
Yeah.
And Mr. Sridhar was talking about merging of e-way bill and e-invoicing. I don't think merging is the issue. What government is already going ahead is the auto filling of data in all these things, because e-way bill has movement details. What the supplier has to basically mention is about the invoice detail that will be auto populated. That is the ultimate aim which they are doing in the GSTN. And then the moment of your vehicle details and all those things has to be separately filled in, because they will not be part of your e-invoicing. So thank you, Mr. Shailendra.
Thank you, sir. So nice of you, sir. And let me thank all the panelists. Mr. Chinoy also, apparently he's not there, but please convey, sir, our thanks to him. Oh, okay. That's wonderful. And
Datt Majumdar, I am a great friend of him, and we keep on talking about you. And
thank you, sir. So nice of you, sir. And thank you, Mr. Badri, Mr. Sridhar, and of course, Pratik is not here. He had to go, he had to rush. So and all the attendees, for their patience and the span of attention, and for the Gandhian patience rather, for going through the entire, the seamless process of deliberations and lots of, the legal wrangles and the legal wrinkles we discussed today. In fact, right from the definition to what is online gaming and what is chance, and of course the valuation side and digitalization side. Let us hope that a lot of these wrinkles will be ironed out very soon, and GST, what initially was thought, it's going to be a major enabler for expansion of our GDP, and I will add 1 or 2% to the GDP in coming years. And let us hope that the digitalization, particularly the growing footprint, it will certainly beef up the entire process in coming years. And after the pandemic, things will be certainly back on track.